Okay, so maybe I think first, I do have, I'm sure a lot of you know you guys, but just maybe a quick introduction. Don't spend too much time. We are very short in time, but just present yourself, your organization, and more importantly, how do you connect with agriculture? What role you play, and how do you connect to Indonesia, right?
Hello, Bambang, co-founder and CFO of Eratani, the first fully integrated agri-tech solutions for paddy farmers in Indonesia. The way I engage with these sectors, the fact is that my mother is a paddy farmers and corn farmers, so I have been first-hand experience of farmers since I was very young. Thank you.
Cynthia, please.
Whoa, that was quite brief. I need to make it brief. But hello, everyone. Hope your late evening is a good, nice one. I'm Cynthia Kusuma. You can call me Cynthia. I'm representing Rabo Foundations. It's the impact investment arm under Rabobank. We're based in Utrecht, Netherlands. But our focus here outside the Netherlands, we also present in Asia, Middle East, and Latin America to help bridging the young farmers organizations from the unbanked to the banked and making sure that they empower smaller farmers, which are contributing a lot to our Indonesian economy, actually second biggest GDP contributor. And looking forward to actually work with a lot more of you. Thank you.
Thank you, Cynthia. Alan, please.
No, great, thanks. Hi, my name is Alan Johnson, and I work for IFC, which might be an unintelligible acronym, but it's the International Finance Corporation. It's part of the World Bank Group, and IFC is the part of the World Bank Group that focuses on the private sector as an engine or a vector of development. And we offer both advisory and investment services, but primarily it's an investment operation. And in terms of the motivation part of the question, I think because we are a developmental, well, we have to balance commercial return and developmental impact. And because of the developmental side, in so many of the emerging markets, it's been said today, agriculture is literally the foundation of the economy, and therefore we want to see agriculture thrive. Now we'll get onto this, but sadly in Indonesia, we haven't invested very much in agriculture, and that's a paradoxical situation which we need to look into and solve.
Thank you, Alan. John.
Maybe by the end of this conversation, Alan will have some commitment from the IFC to deploy more. Good evening, everyone. Selamat sore. I'm John Friedman, Asia Director from Ag Funder. We are a global venture capital investment firm, as well as media platform, investing in technology platforms to address food system transformation. We have offices around the world. Our headquarters is in Silicon Valley. We have offices in London, as well as Singapore, where I'm based. Today, we have investments across four regions, 100 portfolio companies, including 3 here in Indonesia, including Eratani, our friends over there. I'll wrap it up.
Okay, thank you. So I think I'm going to start, maybe some rules, right? Let's have a sincere conversation, let's have honest answer, and I think straight to the point. Maybe I will start with you, Alan, I think with the biggest pocket, probably. I think we talk about, agriculture remaining a big contributor to the GDP, but remaining mostly structurally underfinanced. From your point of view, why does this funding gap persist, right? Is it a capital shortage? Is it a risk perception problem? Or is it actually something else that we don't think yet?
Yeah, so we're getting straight to the point here. So basically, I think we had a lot of figures earlier, 14% of the GDP from agriculture, maybe 29% of employment, so 30 million people. This is significant stuff. But then you look at what's the level of private investment in agriculture. I think it's between 1% and 3%. So you can see there's a huge misbalance or mismatch there. Fundamentally, I don't think it's a capital shortage problem, because actually what's happening is people are investing elsewhere. They're choosing not to invest in agriculture. So I think that's the question we need to look at. So, okay, let's look at that question. I think from an investor point of view, there's 2 main things. There's what's the return I'm going to get out of this? And then on the flip side of that, what's the risks that I'm going to be putting up with in order to, get that return? And I think the problem for agriculture is that it's perceived, I'm saying that because it could be wrong, could be right, it's perceived as being too risky. And then secondly, the returns are not seen as being as good as other, commercial real estate or trading or lots of other things. So I think in terms of if we're going to be looking then at, if those are the problems and then we're looking for the solutions, then we're looking at how do we de-risk this. And then I think for me, certainly for Indonesia, there's basically repainting the story, because I think the opportunity side fundamentally is very strong, but somehow that message isn't landing, and people, investors in that sense are not convinced, even though fundamentally there's a good situation, people are not investing. So I think there's a case for kind of building the opportunity side of this in a much stronger way than exists now. And there are some other issues in there, but I'll save that for later.
I do have a question. It's not on my list, but you talk about de-risking, right? And I think that's something we hear a lot all the time. Investors say, look, I will come in this deal, but this is too risky for us. Like, what are the mechanisms you see around who actually de-risk? And I don't know if you have any case study or concrete example.
Okay, so I think there's a lot of dimensions to risk. I think at one level there's things like, just insurance products and stuff like that. But I'm thinking of more fundamental issues. Like, for example, one of the big fears of international investors in Indonesia, I'm going to speak very bluntly now, which I don't know if this is being recorded or if we have Chatham House rules or anything.
Nothing is recorded for sure.
But, palm oil is a huge successful industry, but also what comes with it is all of the baggage and perceptions about deforestation. And I think, sadly, because of that association, lots of other tree crops also suffer from the same thing. And people say, okay, we've got good rubber, you've got cocoa, you've got coffee, but then people are reluctant to invest in, say, cocoa rehabilitation because they think, oh my God, if I invest in that, I'm going to be on the front page of the New York Times because of some deforestation issue. So there's another level of risk, which isn't just about an insurance product. It's actually about dealing with a fundamental issue about how land use change is managed in Indonesia. So there's a deeper level of risk that we have to deal with.
Got it. Okay. I hope you have some element of answers, but from a IFC point of view, multilateral perspective, what do you think it takes to close the financing gap, right? Not in a small scale, but at scale, right? At small scale, like sporadic intervention, we see quite a lot, but at scale, right?
Sure. So I think I'd actually lean into a little of that last presentation on Brazil. I think there's an element of creating this vision of what agriculture can mean for Indonesia as a modern driver of value in the economy. So not the food, at the moment it's seen, you either see agriculture as a dynamic industry of the future where you can get decent returns by being involved with it. If you don't do that, then agriculture becomes essentially a safety net issue. And I think in a way, Indonesia with the rice production and all of that, agriculture's a safety net rather than an engine of growth. So I think that's the bit that we have to really deal with. So in other words, the agriculture of Indonesia in the future needs to be a high return, profitable enterprise that people want to get into and want to bring. Technology is the theme of this event, want to deploy the latest technologies to get the best performance out of a very strong resource base, arguably an exceptional resource base here.
Perfect. Maybe a last question, actually, also very, very blunt. I was quite amazed, actually, by the turnout today and the amount of collaboration already generated outside. Just, how many business cards and our concrete next step. But if you were to share maybe with Eratani, with Rabo Foundation, or with Ag Founders, how do you see partnership or collaboration with IFC being built?
Yeah, so I think...
How can you work together?
Okay, I'm going to put it even wider than these guys. I think, so from the World Bank point of view, we've just launched this thing called Agri-Connect, And actually that's a bit more of a fundamental thing, which is actually about combining public and private. So I think it was said earlier, you've got infrastructure, fundamental infrastructure that's more of a public sector, public good type of thing. But then you've also got this idea of trying to bring in other players. And I think there are things like blended finance and things which can then underpin other investors. And I think we've already worked in the past with Rabo Foundation on things like trying to get more investments into nature-based solutions and circularity and that kind of thing. I'm sure we've invested in some things with Ag Funder and so on. So I think definitely it's to do with creating that system, to lean back into the other session, that makes it attractive for everyone to come in and invest. And I definitely believe the pie is big enough for everyone to coexist. It's not a sort of zero-sum competitive solution, in my view.
Got it. Thank you, Alan. Okay, Cynthia, your turn. I promise easy questions, but
Okay, now my turn.
something I admire. I think, how long have you been with Rabo? Quite some times, right?
Rabo Foundation's 2 years, indirectly 2 years.
Got
yes.
it. And I think something I really respect is, despite all the fraud cases, like backslash on agri-tech, or you guys are still here and continue to deploy, right?
Yes, we are actively deploying.
Yeah, so I think it's this very simple question is, what makes you still confident about this market when a lot of investors have hesitated or shifted focus or just decided to pivot to a different type of market? Why are you still confident?
Yes, thank you for the question. So we are really confident in agriculture. So please, any VC or other investors that are still hesitating and investing in agriculture, please consider why. Because agriculture is not a trend. Agriculture has always been there and will always be the backbone of economy, like everyone is saying. Second biggest GDP of the contributor. And me, as an Indonesian or non-Indonesian here, as long as we eat nasi goreng, tempe, we all gonna consume Indonesian food produce, and which means that agriculture will still remain essential until every one of us die, because we will still eat food anyways. But secondly, one thing, the biggest learning that I've learned so far, whenever I talk to farmers, I talk to you agri-food stakeholders here, is that Indonesia is not one agriculture market. We are a combination of multi-layers, multi-regions, multi-commodities at different maturity level, and each require different type of investment. And so if you saw Rabo Foundation, Rabo Bank back then, we were here since 1990s, and we invested at cooperative level at first. Well, we are actually cooperative bank. We start with cooperative KSP, Saving and Credit Cooperative, Producers Cooperative, but these days we evolve as well, because we see that there is a lot of interventions in between the conventional agri-service, PDs, or even PTE Ltd, who have Indonesian subsidiaries, AgTechs, AgFintechs like you, and what Angin Pipelines do, and provide for Rabo Foundations. So if we take a little bit closer, layer one, right? If we're talking about layer one, it means the fundamental is not there. Let me talk about area perspective. 2 weeks ago, I've been to Kupang. Anyone has been Kupang? Okay, perfect. Oh, many hands I saw. And Kupang, well, we had a partner there recently. And 2 weeks ago, I talked to them. I asked, what's your main income? Oh, actually my neighbors, they actually just moved to other island, migrations. So migration income is there. And the other one is basic plantations, basic agriculture. Why? It's very contradicting. When we see the local agri in Kupang, we see a lot, it's still early phase of development. We see infrastructure is minimal, irrigation is very limited, weak market connectivity. We don't even see big food processors in Kupang, almost non-existent. And something that is sure is that, of course, the human capital gap in Kupang. That's what we call layer one, in area-wise. In commodity-wise, we have something like soybean. But we eat tempeh a lot. I love tempeh. I love tahu. I guess you love tahu tempeh as well. But apparently more than 80% is imported. Because of what? Because the yield is very small And all of our farmers, they pick alternative crops like corns because for better economics. And that's why this kind of commodities is also layer one. This is where we usually partner with MFI or cooperative like SACO, because they need to first build the fundamentals of this company. It's not about technology, it's about the volume first. It's about building the buyer's predictability. And even the farmers don't want to cultivate the crop. How can we digitize this when they don't want to even cultivate the soybean? That's a layer one. Layer two, like in Java, for example, there's a lot of horticultures. And there we see a lot of involvement. I mean, markets are there, volumes are there, but apparently the consistency, the quality, the post-harvest handling is not there. That's why we partner up with a lot of the SEVE, PETES, conventional agri, just to stabilize the procurement, just to improve the processing, and also trying to make the supply chain more predictable. And there comes the layer three, which we think that this is a better entry point for AgTech. I don't say that AgTech cannot come to the layer one or layer two, no. It's just, it's riskier and it's a lot challenging if they go directly to the layer one or layer two. So layer three is where the system is much more structured and the incentives are much more clear. And that's where we usually go with fintechs like poultry. We have chicken, of course, today. That's also our portfolios. And it means that Rabo Foundation is still here and we still continue deploying because we're trying to invest in different type of entities because we understand in every layers, in every regions, in every commodities, they need different interventions and with different collaborations. Thank you.
Thank you, Cynthia. So 2026 for you, for Rabo Foundation, how does it look like? More funding coming, different type of investment, any change in the strategy or?
For this year, right? This year into 2026. Honestly, this year was actually one of the highest. We deploy the highest in Indonesia. And this year and next year, we would like to work with more MFIs. Why? Because our KPIs is on the not only how many smallholder farmers, but how we can actually empower and improve the farmers' livelihoods in that sense. And through MFIs, collaboration with MFIs, which there are not so much here in Indonesia, we can actually scale and reach out more farmers through this MFI. So one MFI, for example, one SMEs, they can only probably have like 5,000, 10,000 farmers maximum, but through MFI, it's probably 5,000 times 10 organizations. So through one disbursement, we can actually reach out more. So that's one of our biggest strategy as well. So looking forward for more collaborations in that.
Thank you, Cynthia. So I have a last question for you. I don't think there's many investors who can claim to have so much so many portfolio companies, so much, I would say, track record in ag, especially across, co-op, SMEs, and ag tech. I would love for you to share learnings, right? Learnings working with these portfolios, learning how do you get your money back, how do you deal with failures, or how do you see models evolving, etc. So if you were to share maybe 2 or 3 learnings, especially some who were not very expected, right? Who surprise you and things you don't read on Tech in Asia, you don't read in books, etc. Dealing with this portfolio, 2 or 3.
Yes, okay. So we would like to highlight that what we are investing is what you call it, the probably impact and also repayment. Because we are still backed by Rabobank, we still have that repayment capability angle, but at the same time impact angle. So on that side, when we are talking about impact, what I want to set the tone here is that we are trying to promote climate-smart agricultures. And what we also want to highlight is that climate resilience is not just an ESG add-on anymore, but it's a business idea, it's a business concern, because then this pest, this rain, this heat is really affecting the whole repayment. It's affecting the quality and the produce that are sold to the buyers here, for example. to sold to the processing companies here. So it's something that we want to highlight. And something that we want to also mention is about the improvement of the farmers itself, the income, price and quantity minus cost. So how we increase the price, how we increase the quantity, how we reduce the cost. But in general, all of this, we've seen successful cases in a lot of organizations, but usually many of them are temporary. Why? Because all of these are driven, for example, for grants or subsidy or incentives. So when all those grants, subsidy, or incentives are done, they're done, the farmers' adoptions are not there. That's why we also need to underline the commercial viability. And the high-impact agri-models will only success if there comes a strong governance. ESG has always been there, but people always talk about environmental and social, but never really about the governance. But when we're talking about agri, it's all about the people. And in Indonesia, the farmer group is like the operating system in the computer or in our laptop. If it's weak, then everything on top of it will basically crash. And so we see that repayment capability and everything, it is not financial literacy, it's a group enforced norms. So when the group is strong, when the leader is actually have a strong governance, then they will have the mindset, if you borrow, you return. If you commit, you will deliver. So those kind of mindset, they will be set up, then very important. Second is we feel like a lot of these organizations are quite high level to the point that, okay, they have good presentations to you investors, but then they never really on the ground. They never really live with the farmers, which we see it as a gap, because they are not sure what this farmer is doing from 6 a.m. to 6 p.m. They don't know it. That's why they don't understand what the farmers really want. It is, well, the simple thing to put this is that at least the solutions have to have the aligned incentives. When we're talking about impact models, it takes many years, organic minimum 2 years. It's not about certifications cost, probably another 1 year, 2 years anymore, so 4 years, 3 years. AWD, alternate wetting and drying in rice, it's not new, it's been there for a while. But farmers don't want to adopt it because there is no immediate effect. And so the models that finally work is they who understands that farmers will be encouraged to approach, to penetrate, or to adopt this impact model only in exchange of the direct immediate effect, like the guaranteed offtake, premium pricing, and so on. And the last one is the embedded finance. I think because we don't have to rely on something like, for example, grant subsidy all the time, so they have to finance themselves. So they have to understand like what kind of capital that understands them following their cash flow cycle as well. So yeah, we feel like everything can be replicated, technology can be replicated, financing can be replicated, but trust and governance cannot build overnight. And we think that trust is the thing. Thank you.
Thank you, Cynthia. Bonbon, I keep you for the end, okay? John, I'm sure a lot of you here knows you, but maybe a quick few words about Indonesia. Portfolio-wise, what has been your exposure to this market? How many portfolio? How many are successful?
Sure. Well, why am I here on stage, right?
Exactly.
Yeah. I think just to provide a bit of context, AgFund has been investing in agri-tech and food tech. We've been investing as a VC, and I'll expand on that a little bit later, but we've been investing for about 8 years now. As I mentioned earlier, we started in the US. Most of our early investments, most of our early deployment was in North America and a little bit in Western Europe, where we had some team members. It was only really about 5 years ago that we set up a small base of operations in Singapore for our sort of Asia HQ and started deploying more capital in this part of the world. I think we could not be credible investors in Asia if we were not actively deploying capital in a market like Indonesia. Obviously, as we've heard earlier, the size of the Indonesian agricultural market, the contribution to GDP, from a venture capital perspective, the opportunity set. As I said, we could not credibly call ourselves venture capital investors if we were not active in Indonesia. So when we established our first activities, running accelerators out of Singapore, we were looking to attract Indonesian startups, Indonesian founders to come into our programs. That was our first mechanism to unlock capital and write a $100,000 check. When we went and raised our first Asia-specific fund about 3 years ago, again, we wanted to be deploying more actively in Indonesia. We want to ultimately create a diversified portfolio. We take a portfolio approach to our investment activities, but certainly Indonesia has to be part of that.
Got it. Okay. I think, Sam, I love, getting real experience and from your experience deploying in this market, what has been the biggest learnings here?
Well, to be frank, learnings come from experience, learnings come from both successes and failures. We have yet to achieve a success, right?
Success meaning exit, right?
An exit, sure. In Indonesia, or I should say in Southeast Asia. But again, I think it's a reflection of the state of the industry. We know full well sort of what we're getting into when or we like to think we know full well what we're getting into when we make an investment. There's always going to be pivots and challenges, unforeseen circumstances that we face along the way. But I think, again, when we saw the opportunity to be expanding our investment activities in this part of the world and to be getting in at sort of ground zero within an industry, within an ecosystem, in a still very sort of nascent stage, valuations much lower, lots of white space when it comes to opportunity sets for startups like Eratani, Chicken, and others in terms of a sort of competitive landscape. I think it was very appealing to us. One thing I think, as many VC investors would attest to, is sort of our habits to look for patterns and to look for certain archetypes of successes, maybe not in that specific market, but in another market that we may have invested in previously. And so what we've essentially adopted in our investments here across Southeast Asia are similar success stories that we might have seen, whether it's in North America, Western Europe, or even somewhere as close as India. And so a company like Eratani, for example, looks very similar in its business model, its opportunity as a company in our portfolio called Dehat in India. So again, we were attracted to what Bambang and Andrew and others were building based on that model of success that we've seen in a more mature market like India. And there's other examples, other companies that we've invested in here in Indonesia, which, again, we could look to similar success stories in more mature markets and believe in that opportunity and that growth.
Got it, thank you. I think they cut us some time. I still have 15 minutes on my, okay. Wow. It's okay, maybe it's wrong. I think, John, just maybe a last question then. We are running out of time because you have this regional perspective as well. How does Indonesia pipeline deal flow looks like versus other geographies you cover? Or in minus, right?
Look, I think we've spoken a lot about ecosystem accelerators. I was really excited to hear about the Garuda Spark initiative and how that can help to really create this sort of network effect within the agri-tech sector and across the archipelago. I think it's fair to say, sort of Southeast Asia, so it's not Indonesia specific, but sure, if we look at headline funding numbers, I think investment into Indonesian startups in general, sector agnostic, is down like 50% year on year. But again, that's reflective of broader based venture capital slowdowns. A lot of the oxygen in the room has been sucked up by AI. It's something that we all just have to recognize. at global numbers, more than 50% of all venture capital dollars this year has flown into AI. In markets like North America and US, that's closer to like 2/3 of every venture capital dollar is going into AI, and that just means a smaller share for everyone else not operating in that particular sector. It's not unique to startups, it's also on the GP side as well. Just a statistic which I think we're faced with when we're out fundraising. In order to be able to continue deploying, 2 years ago, you had about 4,500 VCs globally raising capital successfully. Today in 2025, 400. And so that concentration of capital across allocators as well as sectors is something that we have to face and something that we have to think about. How do we make agriculture sexy again? How do we bring more people into this space? And I recognize I'm sort of bouncing around here, but I think there's different ways of getting involved. There's different return expectations. There's different, there's different both sources of capital as well as financial return. Whether you're in primary production, whether you're in platform technologies, and everything in between, whether you're philanthropy or a venture capital investor. So yeah, a lot to unpack, but a lot of, I think, positivities looking ahead in the space.
Okay. Okay. Thank you, John. Bong Bong.
Yes.
Maybe to set the context as well, a few words about Eratani, right?
Yeah.
I'm sure not everybody is familiar with the model. So what do you guys do and how do you work with farmers?
Sure. The challenge of agriculture sectors in Indonesia remain rooted on structured issues, require a fully integrated solutions from the upstream production all the way to the downstream distributions. As a farmer by myself, and a son of the smallholders farmers, I have first-hand experienced how the farmers facing multiple challenges from the access to smart working capital, access to affordability of reliable, good quality input, and access to the fair price. In spite of a decade of progress, the challenges remain unchanged. Those kind of farmers still facing the same challenge. In Eratani, that is the reason why we're building a fully integrated solutions, solving the key challenge of the farmers from the access financing, access to affordability of agriculture input, and access to the fair price. To differentiate us among other players, when it comes into access to financing, we are not providing money to the farmers. Instead, we are building the credit worthiness information to address the trust gap between financial institutions to smallholders farmers. We are create a credit score that navigating the entire parameters on the capabilities of the farmers to consider as a bankable farmers. That's number one. Number two, by partnering with the large corporations, cutting multi-layer of distribution channel, we are providing more affordable agriculture input to the farmers. And last but not least, we are partnering with the large corporations, providing reliable supply for both quality and quantity, and helping the farmers to avoid the traps of the middleman in Indonesia.
Thank you, Bong Bong. Okay, I love this question actually. So some insider information told me you managed to fundraise this year, right?
Yeah.
In the middle, I think it's probably some of the worst time, right?
Yeah.
Tech winter, EF time, blah, 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 right? So my question is, how did you build this confidence, right? What was the narrative, the data, the proof that actually make a difference?
Yeah. It is true that 2025 is maybe the hardest time for startups in Indonesia to do fundraising. And we are maybe one of a few entrepreneurs who successfully raised our Series A in the May 2025. The one critical aspect that allowing us to attract local, regional, and global investors, I think the first one, actually, the foundations of the business. The business has been built by such a solid understanding on the problems and the solid solutions. Hence, the value proposition unshakable from the beginning. Of course, on top of it, we need to showcase our capability to show growth, capability to show the path to profitability. Interestingly, and I believe that right now we are no longer play in the game of valuations. Hence, the demand for the profitability is non-negotiable. The company managed to create a positive unit economics since day one of operation. And we are one of the company who potentially successfully to achieve profitability within 4.5 years of operation. This is number one on how we successfully onboard the investors. Number two, I think in terms of a better governance, we are attracting investors that successfully build alignment in terms of vision and also alignment in terms of the solutions, and importantly, create a collaboration that built based on mutual collaboration and respect.
Okay, and I know you're still talking to quite a lot of investors. Maybe share, I think this knowledge is quite important, is how do you see the appetite today, right?
Yes.
Locally, internationally, I know you have been traveling as well to Europe, and is the appetite still here? And then second point, we still have 1 minute.
Yes.
How investors have changed, you know, the way, type of questions they ask you, the type of DD. So is the appetite still here? And what has been sort of the change in engagement, right?
I experienced two conditions that slightly shifting from time to time. Number one, most of the investors right now, it doesn't matter your stage of the company, request for a clear path to profitability. If a company in Indonesia doesn't have the capability to showcase their unit economics that is positive and clear path to profitability, I don't think it will attract any investors regardless from Indonesia or from any other market. Number two, the impact creations. I witness from time to time the demand on the impact of the business beyond just the numbers. Profitability is getting stronger. It is not only beneficially for the farmers we are supporting, but importantly on how the solutions of the agriculture sectors contributing to the climate resilience and the mitigation plans for the better world.
Are you still fundraising or?
Yes, we are in the finalization stage of the second tranche of fundraising.
Series A, right?
Series A. And we invite any other new investors who believe in the potential of agriculture sectors in Indonesia to part of this mission.
I think we are co-investor with, so please go talk to Bang Bang. I think they are doing quite an interesting job. All good? I think running out of time. I would love to thank everyone. Please, a round of applause.
Thank you so much, everyone.
Hello, everyone. Ladies and gentlemen, thank you. I'm the man standing between you and your dinner. Sorry, we don't serve dinner, yeah? Okay, then I can speak longer. But anyway, I'll be brief. I will just share 3 things that I've learned during the past few months preparing for this event and for the past 4 hours listening to all of you. Number 1, agriculture is a system. And to change that, we need a systemic thinking. We need to think there is interconnected components in agriculture. Number 2, the components are innovating. That's what I have learned from this session. You've seen innovations not just in technology, but also in financial. Yeah, you've seen how insurance and credit scoring happening in agriculture. You've seen the innovation in operations, supply chain, and so on. Even you've seen innovations in social, how you convince smallholder farmers to adopt this kind of innovation. And those innovations, I hope, it makes me optimistic. I hope it makes you optimistic as well. Because we are embarking on a journey to tackle the hardest problem on earth, agriculture. If you don't have that optimism, I don't think we are able to manage this. We are able to change the system. So that's number 2. Number 3, my fellow Indonesian will know this word, gotong royong. For the foreign friends, it's loosely translated to collaboration. Gotong royong has been and is the heart of agriculture. It is also the soul of the country. So hopefully the same soul, the same spirit is present today. Hopefully this small event has sparked a gotong royong spirit, a collaboration opportunities between everyone here. And hopefully the meeting doesn't stop here, but will continue and will spark a new journey, a new business, a new venture to improve the agriculture system. So those are 3 things. Oh, and one more thing. Don't forget to download the white paper. I think you will learn some things there. It's beautifully written, it's beautifully designed. Again, don't forget the link is there in your 10 card. There's a QR there. Yeah. Again, thank you very much for attending. Hopefully you learn something. Hopefully you meet new friends, make new connections. And again, let's gotong royong, let's collaborate for the food resilience, not just for Indonesia, but for the world. With that, thank you very much. Have a good evening.
Thank you, Pak Surya, for a closing statement. Gotong royong